US. If you've noticed, things are pretty quiet here. Celebration of the July 4th holiday, celebrating independence. I want to just say a few things about independence that, we prize it for our freedom, but we also need others. And that's how we gained our independence, by a group of like-minded people buying into and having conviction about a concept of freedom and liberty. And in the markets, independence is great. You don't want to be dependent upon anyone. You want to be able to make your own decisions, but collaboration in the market is also critical. I've become much more effective in my forecasting and trading by collaborating with people whose work I respect. I don't take any of their ideas blindly. It has to line up with my work. But my advice on this Independence Day is for everyone to find a great community. And here at TradeGATEHub, we're powered by TradeView Markets. It's TradeView Markets' way of giving back to the trading community, a space, a place to collaborate with other traders, to grow, to learn, and to be able to do that without being pressured to be upsold to a subscription or any other paid service. You have the option to become a client of TradeView, but if you're a trader, you're doing that anyway. So anyway, check out the TradeView platform and let me get to what's happening in the markets, because the rest of the world is open. So I wanted to start off with the euro. And I know that the dollar, that a lot of people were thinking that the dollar was, going to, head up forever. And we had this little pop in euro that held prior lows right here. So, it's still, I think, a high probability that eventually we may take out this support and create some type of stop hunt, which could lead to one more high in the Dixie. But it's also possible that this could be it. And my line in the sand in the euro, which is the title of this particular broadcast, is the 106 level. So if we get back over this level right here, which was the high of last week, 106, you're going to see a lot of scrambling around, short covering. And if we don't, and we have one more push up in the dollar, which stalled at the prior high. So the forecast was for a higher high and just missed it by a little bit. I was thinking maybe 106.30. So we could pull back. This would be the line in the sand. The 103 level, you don't want to be long the dollar anymore. Should we take out 103? Kind of similar to what's happening in the euro at 106. A forecast that I made last week that was pretty much spot on was in the euro. And I talked about a potential high between 137 and 137.50. I was off by a shade because the high that day was, on this is 137.003. So the area was good. We had a real nice pullback. I mean, you're there for a 200 pip profit. And that was really predicated upon what was happening with yields. And yields did collapse pretty dramatically. See that? Okay, so while the yen was making new highs, we were only getting a failing rally in the 10-year. And I did talk about that we could have a pretty good bond rally, which is what happened. The bonds were the stars last week. They took advantage of some weakness early in the week in equities when they pulled back, and Bitcoin pulling back, and a stronger dollar and weaker metals, which I'll get to. So we could still have a continuation move in this bond market. I don't know if it's over. A lot of people are saying it's possible that we just had a little ABC and we're going to head down one more time. I still think the Fed's going to move ahead in this month with another 75, but I wouldn't be surprised after July that they begin to either tighten less or pause. And I think that's going to be the catalyst for a huge rally in the S&Ps. So the S&Ps, let's just cover them briefly. They're down a little bit today in a quiet market, but look at where they held. Okay, so when I was talking last week, I laid out all these different fib levels from the explosion that we had last week on Friday. And it played around with the 61.8 level. So if you want to be long from here, you got to get out of the way under 61.8, under 37.50. And it's very possible that what we're going to get is, we hit this, a little pullback, and now we're going to, if we can just start getting back over 38.20, we have a shot to head up towards a 39 level. I do want to address the precious metals that got hammered, especially silver. Silver still doesn't look that great. It looks like it has to recover the $20 rally, but there's a lot of bearishness in it now. A lot of people are talking much lower levels. At the same time, the gold-silver ratio completely exploded to the upside, which means you want to favor gold. And gold actually put in a pretty good reversal day after cleaning out the stops here under 1800. But if you notice, so far has held this low at 1880. I wouldn't be surprised if we get a rally here, especially if the euro takes out 106. And something that was kind of a standout was silver getting creamed. All right, I mean creamed last week. Take a look at what some of the silver shares did. They really accounted quite well for themselves. So, here's Endeavor right here, putting in a bullish reversal day on a day when silver was down, almost $1 and recovered. So you had some decent action. Here's the ETF, SILJ. I'm not saying that, there aren't lower levels to come in the months ahead, but I would not be short the metals right here. We could get a nice little rally back to, $11, $12. And, I have to have my bullishness, even though I think we could still have a pretty sharp rally, tempered a bit by the action in the metals last week. We're going to need a full-fledged bear market in the dollar to get it going. But even the gold stocks acted well. So I think that you can be long the gold and silver stocks for a bit, but, don't get Nostradamus on the market about, $2,500 gold right now and $38 silver right now. Let's just take it a step at a time. And, it's possible we get a rally back in silver to, the 22 level, and a rally in gold, maybe back towards this 1890 level. And then we'll assess if they could take out those areas, then there's something more going on. So that's kind of a wrap. The favored currency that finally got to my line, look at that line on the Aussie, and we're having a pretty good day today. So very possible we're going to get a rally there. It's much stronger than the euro today. It's up 50. So I'm paying attention to this line. We could have some type of throwover underneath it. But right now I would not be short Aussie, even if it has another 100 pips lower on it. I think that the line in the sand is going to be up here. So for this move, I'd lower my expectations maybe back to about this line, this moving average around 71. And then let's see what happens if we can break through that level. Also, the Russell held up pretty well, although lower on the week, looks like a higher low. But there's one thing that's telling me that there's a possibility in the next couple of weeks for one more new low in the market, and then a very sharp rally. And that would be some of the bearish ETFs. So let's look at, for example, take a look at the quid. Where is it? Yeah, coming up, everybody. Here we go. So here's the quid, which is 2 times the NASDAQ. What do you see? You're right. You see 1, you see 2, and perhaps we get a 3 up here. And, if you're not becoming a believer in 3 drive formations, I'm not saying that they work all the time, but I think you've seen several examples over the last year or so. So it's very possible that we get one more shot up there. And this is a popular ETF, the triple bearish SQQQ, that we could get one more pop up to above this high. As you can see, we're diverging on multiple time frames. So if that happens and the market breaks one more time, I think it could be a great counter trend trade setting up here. So when I look at these, it tells me to be open to the possibility of the S&Ps breaking to one more new low. I want to see this happen actually, and what kind of action we get and which averages hold up the best. I'm expecting it most likely to be Russell. So one other thing that you have to pay attention to is what's happening in crypto land. So far, Bitcoin's putting in a higher low here, and it is possible that we get a C wave up here. If the S&Ps crack, next low in Bitcoin may diverge, as you can see here. And on the 4-hour, that if we had a break to 17,000, I doubt the RSI would get back under 30. So I want to wish all my fellow Americans a happy 4th of July weekend. We, still have our degrees of freedom and liberty here in this country. Was worth fighting for it a few centuries ago. And we're going to have to keep fighting for it going forward. I want to wish everyone a great week ahead and welcome you to join us here in TradeGATEHub.com, and also to check out TradeView Markets, now offering futures contracts. As I said, you can trade almost everything at TradeView. So trade well, be safe, know where you're wrong before you get in, know what your potential objective is when you're right. And don't just say, hey, this looks good, let's give it a shot. Plan your trades, know what you want to do before you sit down at your trading platform and say something like, oh, this looks good, I think I'll give it a shot. Don't take shots or you could get shot yourself. So plan your trades, and I'll be here with Mike tomorrow at our regular scheduled time. And Mike will break down what I talk about in generalities with the indices, with specific sectors and stock picks. I know he was knocking the ball out of the park again last week, so I'm looking forward to speaking with Mike tomorrow. Want to wish everyone a great day. Thank you for your attention. If you like it, hit that like button. If you have any questions, I do answer them on YouTube. I go back and see what the comments are. And as always, invited in our main trading room at TradeGATEHub.com. Don't just count your pips, count your blessings. And Mike and I will see you tomorrow, 9:30 a.m. EST. Adios.